Welcome to the Intelligent Investing Podcast, where modern portfolio theory can suck it. A student of the School of Graham and Doddsville and a clergy member of the Church of Warren Buffett. Here's your host, Eric Schleien.
Hi, it's Eric Schleien. You're listening to the Intelligent Investing Podcast, and we have back on Braxton Gann. Braxton, how you been?
I've been good, thank you.
Yeah, good, dude. You seem to, I don't know if I want to say you're necessarily bullish on shipping. Maybe you are, but you seem to be finding some value in the shipping industry. Would that be accurate to say?
Yes, that would be accurate.
So now there's another company that you're investing in called Dorian LPG. I think you briefly brought it up the last time, or one of the times you were on the show, maybe about 6 months ago or so. Tell us a little bit more about this company, if you will, because we didn't really get to talk about it last time you had briefly mentioned this.
Well, it's very interesting, and this one is a Greek shipping company. I
wouldn't expect anything more. Shouldn't say anything less, but really I think it would be anything more. So I'm going to imagine, before you say anything, it's a really terribly managed Greek shipping company. There's a lot of hair on it, and it trades below NAV.
Most of what you said is no. Some of what you said was true.
Okay, well, let's put some of it right. Tell us the situation here.
It does trade below NAV, but it's not actually. They've actually have a really good track record.
Interesting. Okay, so how did you find this one?
I like follow all of them, and then I watch which one they're trading below NAV, right. And then when the discounts get a little extreme, I get really interested. So last I followed the company for a couple of years, but late in 2020, the stock traded down to about $8, mm-hmm. which was really interesting because there was nothing. The rates at the same time the stock price was falling, the rates were going crazy, and they had been in this essentially not the stock. The ships had been in a bull market for a while. The stock, it just apparently hadn't figured that out. So it was trading at $8, and then the NAV was above 20. And then this isn't even some aggressive. It's not like they have 90% debt to assets or something. This is actually a really conservatively leveraged company.
Okay. Interesting. And tell us about the management's track record on this business.
The management's track record is, since they took it public, they haven't diluted shareholders at all. They've actually bought back a significant amount of stock at large discounts to NAV.
And how are you calculating the net asset value of the business?
You take all of they own VLGCs. So you take the secondhand market value of VLGCs, and then you add it up, and then it adds, and then you subtract the debt, and then you adjust for the value of the.
I'm asking, where are you getting those numbers for?
Value Investor's Edge.
Okay, so also Value Investor's Edge. You love Value Investor's Edge, don't you?
Yeah, it's a pretty neat service.
For listeners who may actually want to sign up for it. By the way, they're not a sponsor of the show, so I'm giving you guys a little free advertising. But they have a website that you can go to and check that out.
It's a service on Seeking Alpha.
Oh, it's a Seeking Alpha service. Okay, cool.
And it's pretty good. It's a lot better than a lot of them aren't that good, so that's not high praise. But
yeah, I was gonna say I've seen some of these services that were not that impressive. But and what's the guy who runs it?
There's two. It's mainly Jay Mitzmeyers and James Catlin. They work together.
Okay. Shout out to them. They seem, if Braxton Gann approves of your service, it's probably a damn good service. So anyway, this stock now, is this a large position for you? Is this part of a basket? How do you?
It is a large position for me now because it's gone up so much.
Okay.
It's I bought it at one price, and then it fell a lot. So then I bought more, and then it was about 5% of my portfolio, 7% of my portfolio then. And then the stock price then was $9 at my average cost. And then now about 14 or 15.
And the NAV is currently what?
23. There haven't been a lot of too many transactions in this type of vessel, but you can extrapolate from that it's between $21 and $24.
Here's my concern with these shipping businesses, and I would like to hear your view on this, right? I think markets tend to be mostly efficient. Would you agree it's mostly efficient? Obviously, we wouldn't be able to do what we do if it was fully efficient, but generally things are pretty efficient. Would you say that to be true?
Yeah, especially in larger than a billion.
Yeah, but I look at situations like this, and I'm always trying to figure out, okay, like, what am I not seeing? Am I being dumb? And you look at these businesses, right, where you clearly have a NAV that's lower than the current market price, and personally makes me uncomfortable. Like, it's like, okay, this is very simple. Now, sometimes things are just simple, but I'm just trying to give you my thought process here. So, this is what I wonder, right? You have this industry that over time destroys a lot of capital. Right, it's over time. It has not been a very good industry. It's very irrational. They tend to do things at the worst times. Things are great, so they're going to build all these new ships, which is like the worst time to be doing that. And then they go into these like massive depressions, and now they're loaded with lots of debt. And then you get the drill. I'm obviously speaking with the choir here. So my concern with these businesses, and why I personally have not been a buyer, even though I think what you're saying is very compelling, is long term, it's should these businesses ever trade at NAV? If these companies are if you're in like this horrible industry that's very irrational and things may not change, it always, I just like, I remember in high school, it was the same story. I was like, oh, things are changing. It's just around the corner. Buy all these companies at below NAV. Like I remember XL Maritime was something I looked at in like 05 or something. I was in high school. And was trading at like pennies on the dollar of NAV, and then it went back because they took on all this debt, and then those dry ships, which was a horrible. We talked about that on the show before. What a horrible business they were. And so if I look at 10 years from now, and maybe there's still a bunch of crap, and maybe they've gone through a cycle or two, and it's maybe they never traded NAV, and maybe they're only worth like 70 cents of NAV because they're that poorly run. And in the meantime, you could be buying some business that's cheap-ish, but growing at 20% a year. And that's how I'm always weighing the opportunity cost. Like, do I want to buy a shipping company at half of NAV, or do I want to buy something that's growing at 20% a year at 15 times earnings that's a small cap? And that's what I'm always weighing against. So I get it if it's 10 cents of NAV or something ridiculous, or maybe opportunities in some of the distressed debt where it seems like, okay, you can actually get par and this thing's trading at 30 cents on the dollar. But I always get weary of the common stock when it's trading at half of NAV, because I don't know. These companies seem to rarely trade at asset value. Push back, or you do agree with me here? Obviously, you don't really agree with me because you've invested. So.
Well, I certainly agree with basically with what you're saying, because I've looked at that, and over the long term, you're right. Investing in ships generally gives you over time, you earn the returns of corporate bonds.
Yeah.
With the volatility of junior miners.
Yeah, exactly.
And that's data.
Yeah.
But when you look at the individual companies, they don't just decline at a steady. They don't, and then of course you have the shipping equities are just like call options, and naturally they decay and eventually expire worthless. But in general,
elements here.
But they don't do that. That's not a steady downward decline. They go to they're 50% of NAV. You buy at 50% of NAV, and then rates are going up, and then suddenly they start making a lot of money, and then they trade at 90% of NAV, or if you're really lucky, you trade at a big premium to NAV.
How do you know when to get out?
Just don't stay too long. I usually scale out as it gradually.
When do you start selling? What do you have a personal threshold for you? Like when it gets to X of NAV, it's when I'm gonna start selling.
One of the things I look at more than the valuation is the order book. If they start doing crazy things and building a bunch of ships, then I get nervous.
Yeah, as you probably should be. Anything else on this business before we wrap up? I think it's a pretty simple idea.
There's obviously it's not really as simple as what I've said. If you look at all of there's all sorts of factors that go into demand, and people worry over it's going to decline because of this or this, or shale.
You can't predict that.
Shale is going to not grow as fast. But I think that these are generally a little bit sensationalistic fears in this case, without really looking at the whole picture.
Do you know if anyone's ever done a study on if you were to be buying these companies like at X of NAV and selling at X of NAV, what your returns would have been over 20, 30 years in an industry that's been pretty bad?
I don't think anyone has, at least that I'm aware of, because the data you would have to have for that is not something that the people who would do those type of studies they wouldn't have that data or be interested in calculating that.
Yeah.
But I do know that my returns overall have been good. It's very volatile, so I've had stocks that haven't worked out, but overall my returns have been pretty good since I started.
Did you ever invest in Scorpio tankers? Like, I can't remember if you ever did or not.
Yeah, I invested in that. I sold it recently. I think that was the first podcast we did, and it was like 26 when I invested, and then it went to 40, and then it went to 12, and then I bought some more, and then now it's back at 23. So I did make money, but it's very interesting.
You didn't? Or
what?
You did not make money, or you did on that?
I did make money, but not as much as if I had invested in like the S&P 500. So that wasn't like my greatest investment.
Right. Yeah. All right. Well, always interesting, Braxton, and you're welcome on anytime. I appreciate having you on.
Well, it's always enjoyable. Thank you.
All right, talk to you later.
Thank you for listening to the Intelligent Investing Podcast with Eric Schleien. If you'd like to connect with Eric for questions, comments, feedback, ideas, or to inquire about being on the show, please contact Eric at intelligentinvesting@gmail.com. So, in the words of Charlie Munger, I have nothing to add.